Good afternoon, everyone, and welcome to this Open to Export webinar from the Institute of Export and International Trade. Today, we are looking at how you can succeed in the US market. My name is William Barnes-Graham, the Senior Content Editor at the Institute, and I will be your host for this afternoon. Now, the US is the UK's largest export destination by country, and with a shared language, historic and cultural ties, it is an obvious market for many UK firms looking to sell overseas. Having left the EU, the UK is now in a position to negotiate its own free trade agreements, and the US, unsurprisingly, is the government's prime target, with negotiations having begun earlier this year. To discuss the impact a deal could have and to provide practical tips for succeeding in the US market, I am delighted to be joined by three very knowledgeable speakers today. Ian Gowers from the Institute will give an overview of the customs requirements exporters sending goods over the Atlantic need to know about. Frank Levene from Avitus Group, who are in a joint venture with Newable in the UK, will tell you how you can establish your business within the US. And Andrew Cook from today's webinar partners, Bitby Financial Services, will discuss how you can manage the fluctuating values of the pound and dollar. Before we go into the presentations though, we'd like to ask you a quick straw poll, which you will see on the next slide. So this poll is just to gauge people's experience trading with the US. I'm going to launch it now. And I'm asking you, do you already trade with the US? The options range from yes a lot, yes a little, no but planning to, no not yet planning to. And just a couple of housekeeping notes while that poll is ongoing. Firstly, you can contact me with any comments or questions using the question panel on the control window to the right-hand side of your screen. We will hopefully get to a number of your questions towards the end of this webinar. Secondly, you will be receiving access to today's slide pack and recording of today's webinar in a follow-up email we'll be sending over the next day or so. So please do try to listen in to what the presenters today will be telling you. So I'll just leave that poll open for another few seconds. And thank you everyone for responding. Some interesting findings here already. So I will close the poll in 3, 2, 1. And here's how you've responded. So about a third of you do a lot of trade with the US, another third do a bit, and then the other third of you, between you, are not yet trading with the US. So for all of you here, I hope today's webinar will be useful. Anyway, to begin the presentation, I'd like to introduce Ian Gowers from the Institute of Export and International Trade. Over to you, Ian.
Thank you, Will. Well, good afternoon, everyone. So could I just take the next slide, please? Okay, so obviously heading up unlocking trade potential within the USA. As you're all probably aware, which we also mentioned, we're in the middle of probably negotiating a free trade agreement, which will hopefully give our economy some form of advancement and in theory, being able to lower particular tariffs for certain commodities. It's quite important to point out at this stage that as far as the US tariffs are concerned already in existence, they are already quite low. The highest tariffs, I think, are probably about 10% for cars. There may be some movement on this in the future where food, which has been in the press quite a lot, may have an issue later on as far as food products. Obviously, the benefits of free trade is to basically align and harmonise standards and regulations. There is a number of analysis being done, but at the moment they're saying that an actual deal will be looking at an extra 0.16 of GDP for the UK over the next 15 years. And that the government is hopefully going to basically eliminate or reduce a lot of non-tariff barriers by 50%, which is quite a big expectation. fully or partly untethered from the EU regulations, the UK could adopt more US standards for its goods and services, which is something to think about and be aware of in the coming months as things go on. And also the US could also choose to adopt more UK standards in selected number of areas. There also will be some exceptions for those that are transiting through to Northern Ireland, which is there's a lot going on at the moment, and I think there's actually a webinar tomorrow actually on certain things that are going on about that. So there's quite a lot going on with Northern Ireland. There is a link there. I've added a link regarding the US FTA negotiations. This was put together by the DTI, sorry, and it's, if you get an opportunity, it's worth having a look at what's been said and what's ongoing there. It's quite some useful information. Next slide, please. Okay, so exporting to the US from the 1st of January 2021. Well, we're obviously looking for a free trade agreement we just mentioned. We already have a mutual recognition agreement with the US, so that's already quite important. And that will obviously include things like electromagnets. There's also things like the arrangements with pharmaceuticals. So there's things that are ongoing there already or been in place for some time. Until we have a free trade with the US, obviously UK exports should be under the most favoured nation, which I said is already under the World Trade Organization's rules. So that's already in place. And obviously there's a lot of recognition and testing and inspection, which is already in existence. So we're not having to negotiate any of those. They're already in place in a lot of different products, and they're quite well known. Next slide, please. Okay, so the things that obviously control, which will remain unchanged, I think is probably, unless there's something obviously done within the free trade agreement and other arrangements done, is obviously control goods, military items, dual use and firearms, etc. will probably still stay in place, all the regulations on that. There is a number of links again on the government site. You should have a quick look at the export into the USA after the EU exits. Is the first link. And for those that are looking to develop a market into the US, there is a link there which says check duties, customs and export goods. So it's worth having a look at that, so you'll be able to see what the import duty is on or if any, currently within the United States for your particular product when you've got the commodity code. Next slide, please. Okay, as far as the export declaration, there's not going to be anything different than we already do at the moment when you export goods. Obviously, this will actually become more applicable to the EU. That will be different. It will still be done through Food Chief or a system called CDS, which is currently being developed within customs. Next slide, please. Okay, for those that are new to exporting generally, the same sort of thing applies, more or less global, but certainly for as we're talking about the USA, you need to be able to have certain information on a lot of documents and paperwork, which is obviously the exporter and importer, a custom procedure code, CPC, commodity code, the value of the goods, country of origin, country of destination, and control information if it's required. Country of origin is going to be under quite a lot of issues in terms of documentation. You should be obviously aware of that, and that will be applicable even if we have a free trade agreement. Next slide, please. So I think the most important thing that may not be aware to a lot of people who haven't done much business into the US before is that the US has quite strict rules regarding their import procedures, and they actually have licensed customs brokers. And obviously, to be able to do an import declaration, you really have to be an entity within the US to be able to do that. The same as you have to be here actually to do an import. That's a global thing. But one of the things you should be aware of is that you need to engage with your suppliers over there to make sure they're fully aware of how the customs brokering works and checking the commodity code in. Customs brokers in the US are predominantly individuals either working for an established broker, either for themselves, or they're actually working within a logistics provider. as they are licensed, custom brokers will need to have a power of attorney to act on the importer's behalf. So it's quite important that you do get involved with your importer, and everybody's fully aware of what's going on as far as the import clearance is concerned, and to make sure that there's no delays. Next slide, please. Okay, I think as far as custom brokers are concerned, these are quite critical. They have a lot of services able to do obviously import and export declarations. Imports can be done in advance because of security filing, and that's all done automatically as it's done in most parts of the world by the carriers, etc. They're able to help in terms of duties and taxes. They have other relating services where they're engaging with government agencies. So it's quite important that you pick the right customs broker or the right logistics provider to be able to make sure goods can help. I know that you're not actually physically going to be necessarily paying for those unless you've got an entity there, but it's good to make sure that you're all working together with your importer. Next slide, please. Okay, so just adding on a few more things there. Transit movements, obviously things that are moving under bond. If you wanted to clear stuff later on outside of the port areas, that can be done. Obviously, they're involved in permits and licensing and have fully understanding of all the requirements within the US. And obviously, there's a number of additional services that they're able to offer, which is basically is unlimited, really, as far as normal import procedures are concerned. Next slide, please. Okay, one of the most important things, which is if you're going to do a lot of business with the or internationally generally, but if you're going to do a lot of business with the US, there is advantages of having AEO, automatic economic operator licenses, which you can acquire here in the UK. They have different names in Canada and US, and obviously in Mexico they are called authorized economic operator. So this is quite an important program that you should try to have a look at, and it helps. And the benefits are, next slide, please. Makes borders or import clarifications a lot easier, and they're seen as low risks, so therefore you're less likely to be challenged at customs, and things should be moving a lot quicker. It helps marketable and global competitiveness. It's always good if you are dealing in a market to just check whether your competitors actually have AEO recognition, just to make sure, because there must be a reason why they're doing it. So it's worth checking for that. It reduces the number of examinations by customs. As I say, it helps basically reduce a lot of potential tampering and moving of your goods when they're going through customs. Next slide, please. Okay, and as of one of the benefits, obviously, is we've already got mutual recognition, and AEO enhances all that for you. And as I say, it's quite important to try to get onto this program, especially if you're doing a lot of business with the US, because it sort of just makes things move a lot easier and a lot quicker. So it's good. And I think that's the last, if I remember right. Yes, so that's everything for me. Next slide then, please.
Thank you, Ian. A great, very good whistle-stop tour of export requirements with the US. Obviously, there's plenty of depth you could have gone into there, but I think within the time, a very good overview. I'm just going to launch a second poll between these presentations. So just asking now, would a trade deal make you more or less likely to do trade with the US? The options range from more likely, about the same, less likely, not sure. And Ian, just kind of while people are answering that question, we've had a question in from Matt, who's asked, how might a deal signed or not signed with the EU affect trade with the US, particularly with regards to product standards?
I don't think at the moment it's going to make any difference to what's happening at the moment. If there is a deal, I presume you mean with the free trade agreement, then obviously there will be lower tariffs and agreements done on certain products. We already have a lot of arrangements in terms of regulations and quality control and those sort of things. So that will be very, very little changes, I think, other than maybe some products there that they may enhance later on. But the idea with the free trade agreement agreement will be to basically try to eliminate any tariff heading. So if you were to check what your tariff heading is, say for your particular product, then let's say it's 3 or 4 or 5% or whatever, going into the US, the chances are that hopefully that will be eliminated if we can get a good free trade agreement, and vice versa, obviously, if it's imports coming into the UK.
And with the EU deal, because presumably if we sign a deal which locks us down to certain standards for things like food and animal products, animal origin products, that could potentially hamper the UK or limit the UK in terms of what it could negotiate with the US.
Not sure, because at the end of the day we're leaving, and a free trade agreement shouldn't really stop us negotiating free trade agreement. I think that's one of the big stumbling blocks that are ongoing at the moment. So I don't think that it should affect any trade agreement we have or that we do outside. As you already know, we've already done one with Japan. It shouldn't inflict anything on us totally. There may be some issues, obviously, in terms of food that may come out of it at the end of the day, but at the moment it's still a bit of an unknown quantity, really, to be honest with you.
We shall see. We shall see. Thank you, Ian, anyway, and a very good question, Matt. So just going to close this poll now and share the results. So interestingly, over half of you say it will not really change much. It'll be about the same, 33% more likely, and only a couple percent there not who say it will be less likely in a deal scenario. Anyway, so now let's bring on our next speaker, Frank Levene, from Avitus Group, who, as I said earlier, got a joint venture with Newable in the UK. So Frank, over to you.
Thank you very much, William. And first of all, thank you so much for the invitation. It's a pleasure to be with everybody, and I hope that the next 10 or so minutes you'll find instructive. If you go to the next slide, what I look to try and do here is demonstrate how we can make America easy for you, in so much as streamlining the way you approach the United States. For myself, I've been working in the foreign direct investment space for 6 or 7 years now. I have an international background. I am an American citizen. I have dual nationality. I have a home in the States. I do understand the States a bit from both a personal and professional perspective. I've worked internationally, not only with the US focus, but also in Africa, Asia Pacific, and South Asia, and indeed also in Moscow for a few years. So hopefully I bring a little bit more to bear than the average in this space. But with all due respect, look forward to talking with you. Next slide, please. Thank you very much. We're very honoured in the UK. In the last 18 months, we've established a joint venture with the Newable Group in London, and we have a partner in the UK now. Up until that point, Avitus was working in the UK largely under my auspices, and we're now joint venturing with a very nice partner in London in the UK called Newable. But the Avitus Group is really where the work is done on the other side of the pond, in terms of creating, if you like, opportunities for a soft landing. Avitus has been in business for about 20 odd years. We look after over 3,000 companies. An increasing number of those are international companies, and we provide solutions that we seek to simplify and strengthen and grow the businesses of those companies we work with, not only on the international front, but also in the United States, domestic companies. So we have a team of 400 in the US that looks after all our clients, and we help with a combination of a customized approach as well as a more comprehensive level of support as you might need it. But it's a rather unique entity. We offer an end-to-end solution, and I'm working in the UK pretty much the whole time, beating the bushes. And as I was said then, I'll say again now, do feel free to reach out to me with any questions or follow up with a private consultation on the phone, or just exchange of emails. To be my pleasure. But we've been in this business for over 20 years, and certainly in the last, I think, 7 working in the UK, looking to support UK investments into the United States, how to make that happen in a productive and smooth way. Next slide, please. Well, as Ian was saying, I didn't want to repeat anything untoward here, but the US is a huge opportunity market, $21.4 trillion GDP, huge number of companies. It's our largest export market. 36,000 companies in the UK work in the US market doing business there, and it continues to grow despite the unprecedented times we live in. Last year it grew by just over 2%, and even despite the turbulence of the current climate with post-COVID, the market is still quite buoyant, certainly across certain key sectors. And our thoughts are that we'll continue to do so in the foreseeable future. It's a major marketplace for UK companies in terms of both exports and indeed making foreign direct investments, as indeed we are a significant recipient of US investment into the United Kingdom. I think we are equal one for each other, both flows of investments going one way as indeed back into the United Kingdom from the United States. So a significant marketplace. They're the facts, no running away from them. And the politics notwithstanding, it's a very important marketplace for the UK, and I'm sure will continue to be so, an attractive one. The logic of all this, of course, is unlike perhaps the other presentations, we're about rather differently, less about exports, though we believe that companies that are exporting will care to go to the next level, if they do care to the next level, and establish an investment presence to leverage their successes in the States. We'd like to think we're well placed to help them take that next step in going forward in North America, to exploit these and take advantage of these significant business facts that are laid out for you just here in this slide. Next slide, please. So what are the challenges? Well, there are at least three buckets of challenge. I won't over belabor them, but they're nothing to be intimidated about. Culture-wise, we speak the same language, but we do have a different culture, whether we wish to consider it or not, and without being in any way evaluative. It's just a different value set in many parts of the States, and indeed within the United States it can be quite different by region. I mean, I lived in Florida for 20 odd years. I worked in Miami for a while. I often talk of, and I left my family up in Northeast Florida in Jacksonville, where we have a home, because the kids are in high school. And I used to find living in Miami was quite different from living in Jacksonville, which is on the Georgia border and up in Northeast Florida. And indeed, across the United States, there are differences you need to bear in mind. And again, this has a bearing both in marketing, customer service, and indeed in how you recruit staff in the States. You can't simply lift marketing collateral from the UK and expect that it will sit well and resonate in the US marketplace. You do need to have a different approach, and we have a marketing group of some 20 that can help you with sensitizing and socializing UK collateral so it works well in the States. And even the customer service approach needs to be again pivoted in a way that resonates with the US B2C or B2B customer. Recruitment again often is a key consideration when looking at culture, in so much as that you do need to have often, to be successful, Americans like to be sold to and pitched at by fellow Americans. They understand each other's language. They understand the football going on which is local. They may even have their own crossover in terms of their own networks. A US recruit will bring a black book, but again, they'll have a US person will have a ready-made understanding of clients' needs and wishes and expectations, because the cultural fit is endemically there, and it's less of a stretch than coming and going from the UK trying to do business on an ongoing remote basis. Scale is not to be underestimated. We've got all the time zones to consider, and the regional dynamics are very different, but it's a big market, and scale is something not to be underestimated. And while the West Coast is attractive, certainly for those in the digital space and other sectors, other verticals, it's fair to say that 37% of the US GDP sits within 150 miles east of the Mississippi River. It's a significant number, and of course, ease of access out of the United States from the eastern seaboard is not to be underestimated as a feature, as an advantage. But there may be good reasons to be elsewhere, and those can be looked at with you. We are very open to look at all states and all verticals. We're state agnostic, so wherever the talent pool is, your customer base, your current market is from an export perspective, you want to build on that, we're more than happy to support building out that presence from where you currently have an existing business relationship. And again, the compliance piece, last but not least, there are federal and state laws to be abided by. Nothing untoward here, but again, we can help you keep straight on all of that. And indeed, we also have an insurance brokerage inside our house. But again, when it comes to workers' compensation, particularly 80% of the states require that you have that in place for your employees to cover them for health and safety. But again, we also provide other insurances that may be of interest, not so much from a compliance perspective, but just because it puts you in a competitive position. We are able to offer medical insurance, which is for many Americans a crucial benefit that comes in their payroll package, as well as other benefits like vision, life and dental, and 401k, which is a bit akin to a private pension plan in the UK parlance, if you like. They're the three sort of challenges that we like to touch on, but nothing again here we can't help you walk through and take you through this in a step-by-step pragmatic and programmatic fashion. Next slide, please. So we have, if you like, 12 steps, but they're not necessarily in any particular sequence. We have a suite of services that we can provide help to UK companies looking to invest in the States. We have a very consultative approach, but hopefully that this tweaks your interest and you want to talk to me a bit further by phone or by email. I'm happy to talk as much as you need. We have a very consultative approach. We'll give you as much time as you need to understand where you're coming from, where you're at, where you want to go to in the United States. We help you with sorting out your bank accounts. Once you've established an entity, which again, we can provide support there. Not a difficult thing to do. It costs $2,500 to establish an entity. We'll give you guidance, the type of construction you'd like to put in place that works best for you, which location, as I know, we're state agnostic. Once you've got an entity in place, it's quite straightforward. Once you get a federal employer identification number from that incorporation to open a bank account, we can do that for you either remotely, or if you want to come over to the state in person, we can do that with you. We're not a law firm, but we have excellent relations with a number of law practices that can help you with visa immigration support. If you want to come and go to support your US investments. As I mentioned, we can help you create a US legal entity, which is step 5. Banking support is there. Insurance, we mentioned that a little moment ago. Tax planning and tax preparation is something quite important. Again, the US tax code is not going to be particularly perplexed by it. It's quite straightforward, actually. And indeed, we will help you with the tax management, both federal taxes, how to get a handle on what that might look like, local taxes, and any sales taxes that you might incur. Currently, if you want a snapshot of what you might be looking to draw down in terms of sales tax exposure, we're happy to have a look at that with you on a complementary basis to establish a relationship. We have an accounting function. Again, that's something you need to establish. If you do it through relationships your UK accountant would introduce you to, or working with us, we're more than pleased to partner with you on this, and again with your UK accountants, to ensure that your GAAP general accounting principle is compliant, which is the US accounting benchmark for being in good order. We can provide IT support, again, whether it be disaster recovery, 24/7 disaster recovery, or the micro level, simply getting mobile phones, laptops, finding an office for you. We have a strong recruiting function. Again, the variety of ways of doing that, but we come from putting someone on our payroll for a year or more, and we take care of everything, all the HR. You just pay us $500 a month to look after the HR and the taxes and the compliance. Obviously, you have to pay for their salary and any benefits you care to offer, but we take care of everything else. You just give us a check once a month into a UK bank account. If you don't like the look of the employee that we found for you, because any reason it doesn't work out, we're happy to sort of do it again as a complimentary basis if it doesn't work out within 3 months. But again, it's quite a novel approach, and whether you want to go in full on from establishing an entity, have your own person on the ground, or having someone under our wing, or a mixture of both through a co-employment relationship, we're very open to entertain that. It takes quite a lot of the risks out of the equation, some of the headaches, some of the hassle, and you can dial back or dial back up if you get a successful, which we hope you would have, a successful entrance from the recruitment we put in place for you, so you can go to a much fuller expansion and build on that. So they're the 12 steps. We have a suite of services all joined up that address most of all of those. We're not a bank or a law firm, but we've got excellent relationship with banks and law firms where those pieces need to be addressed, but everything else we have under the umbrella of the Avitus group in the States. And we are, I should have mentioned, in Montana as the operational hub. Our corporate offices are in Denver. We've got 14 offices around the States to taking care of HR and sales and customer service support requirements. Next slide, please.
I thank you. Just Will here. Just a quick note that we're coming up to the end of this as well, so we can wrap up these couple of slides quickly.
I'm sorry we're running a little bit on here. There are four entry plans that each one of them may or may not be right for you. A US team without setting up a company, we call that the validation pilot. I touched on that a moment ago. Put the person lady or gentleman on our payroll. Establish a US firm with no US employees, and you just come and go. entity formation. We have a set up a bank account for you, help you with insurance, establish a US firm and hire a team. And then if you'd like to streamlining the operation, going with a different approach, offering maybe just insurance, recruiting, co-employment, tax and accounting. That again is a hybrid of number 3, but again, between 1, 2 and 3, 4, you've got a number of options. So I'm very happy to discuss all of those. Last slide, I think I'm running right to the end. Conscious of the little gentle reminder of all, thank you for that. These are the steps, the 5 steps, again in the schematic form. We're very happy to have a free consultation with you, as many chats if you like. We'll help you design the entry plan, agree on the support you might need from us and others that you may care to draw upon. We'll help you launch the business in the US. We'll stay with you on the, not only for the moment, but for the long haul. And we believe we're well positioned with our joined up and hopefully well established and well grounded range of services to help you make a great start in the States and make it for the long haul a very sustainable business investment for the company that you represent. And that's we complete, I think. Will, I'm going to hand back to you if I'm not mistaken.
Yes, thank you, Frank. And if we move on to the next slide, we have another poll. If you can stay unmuted for a second though, Frank, I've got a couple of questions for you from the audience. Before that, here's the poll. So we are asking, what should the UK prioritise in its negotiations for a trade deal with the US? Tariff reductions, mutual recognition of qualifications, maintaining current standards, removing non-tariff barriers, or provisions for digital trade. Frank, a couple of really interesting questions actually, which touched upon a point you made in your presentation. This is from Peter and also from Dale, basically commenting on the fact that the US is massive and there is obviously huge diversity in terms of different parts of the US. I mean, Dale's question is, how much do you need to regionalize and then prioritize which regions are the closest match to the UK or to a company's offering?
Well, that's a very good question, and the short answer is yes, you do. I mean, I think that from a commercial perspective, it's important to try and take advantage of any business you already enjoy in the States. So a lot of companies build their presence around a distributor or an agent or a customer cluster that's already in place in the United States. The Eastern Seaboard is very attractive because, as I mentioned in my presentation, a large chunk of the US population and GDP sits there. So there's plenty for you to go at, but there are clusters all over the States, whether you're in life sciences, you're in the digital space, if you're in the entertainment world, or just general manufacturing, certain regions will be attractive to you. Also, other considerations which we talked to you about will be, where's the talent pool so you can build out your recruitment plan and draw folks to your company from the industries that you need to build a successful presence. Easy of access in and out. Last but not least, the quality of life. I mean, you may find that when it's all said and done, one region might appeal more than another because of the tax regime. The sun shines more readily than somewhere else. Say the Northeast has a more severe climate than say Florida, and these are the considerations that come together. Every company is different, but you do need to have a regional approach because it is too much to bite off in one bite. And we recommend taking a staged approach.
Thank you. And a question from Nick has just come in. How can people contact you, Frank?
Well, on my email, which I think that's going to be shared by you, Will, I'm not mistaken.
Yes, I will share that email with everyone after.
And my telephone numbers. You're most welcome to call me, send an email or phone and or email, whichever suits you. I'm at your kind disposal. Happy to have a conversation as much as you need and feel we can add some value.
Fantastic, thank you, Frank. And again, thank you everyone for the questions. In terms of the response to that poll, so 37% unsurprisingly put tariff reductions at top, but also a fair few people who are looking for current standards to be maintained, obviously very topical, that issue, and a lot of people asking for non-tariff barriers to be removed as well. So thank you everyone for responding to that poll, very interesting responses. Anyway, without further ado, if we move on to the last slide, so the next slide, I'm delighted to now hand over to Andy Cook from Bibby to talk about FX.
Thank you, Will, and good afternoon, everybody. as the name suggests, Bibby Foreign Exchange, we sort of we're here to help with any exchange rate risk, fluctuation of currencies, etc., and to try and manage that risk. Initially, we all wanted to just have a quick look back over the last 12 months or so. So if we move on to the next slide, we can see that the pound has had quite a lively year for various reasons. Initially, if you look at where the number one is, we are actually in the build up to the last general election, which obviously seems like more than a year ago these days. But the pound actually strengthened from the low 120s as the polls indicated that we wouldn't get a hung parliament, and politics aside, we wouldn't get a Corbyn-led government. The actual size of the majority was a surprise. So that was the spike up where the number two is. We actually saw the pound back to 135 against the dollar. It came off again as people realised that Brexit wasn't going to be the slam dunk that we had initially perhaps been led to believe, and we're sort of drifting lower. There was some dollar demand due to the trade dispute between the US and China, which perhaps counterintuitively did increase dollar demand. And then along came COVID. So if we look from the move from 3 to 4 on this slide, that was a almost 20-cent drop. I think it was about 18-cent drop in the course of a week, which was a massive rush into dollars as it's safe haven properties. It was exaggerated somewhat by the fact that the pound is somewhat dependent on foreign direct investment. Plays a big part in supporting the pound. Obviously, when everyone's rushing into dollars, that demand dries up instantly. So that was possibly one of the sharpest moves in historical moves ever for the pound. And we went to as low as 115 to the dollar. At that point, this is when government or monetary stimulus started coming around. Global central banks started introducing QE, printing money. The Fed actually announced unlimited quantitative easing, whereas the Bank of England, for instance, initially came up with, I think the figures were about £500 billion. The ECB also had a limited, albeit large, program, but the Fed announcing unlimited QE was enough to weaken the dollar again. It also stabilised equity markets, global equity markets, which reduced this dollar demand, this safe haven dollar demand, and we rallied again pretty sharply, and just gradually sort of meandered around. Equity markets again were supported, and with that, dollar safe haven demand reduces, and it sort of edged higher the pound. Then the big monetary policy change came from the US, whereby, as opposed to the Fed mandate being employment and inflation at or around a 2% target, the Fed announced that they were going to introduce a flexible inflation target. What this meant was that where inflation runs below target for a period of time, be it a year, be it 2 years, they would then allow the economy to run hot. So this basically means that the US won't be raising interest rates anytime soon. They've actually said 23 would be the earliest they could see any interest rate rises. Again, weakening the dollar until we get up to number 6 on this slide, which is where all of a sudden Brexit realisations or reality hit home. The UK introduced the Internal Market Bill, which increased the friction, raised the rhetoric level between the UK and the EU, and the pound dipped again. What this chart really shows is where uncertainty undermines the pound. The pound is very much a confidence currency and a certainty currency. So when things are going well, the pound probably quite obviously is supported. When there is uncertainty or a crisis like the one we've seen this year, the pound very much has very few friends and suffers accordingly. If we can move on to the next slide, please. This is a longer term view of the dollar index. It's called the DXY index. We've gone back to roughly the start of the financial crisis of 2008. As you can see, the dollar index was bumping along around the 70 level, and on that initial spike was obviously the decline of Lehman Brothers, the general financial credit crunch that we saw. Pardon me. That pushed us up to the 90 level. Then again, the initial QE programs by the central banks caused it to drop back again. Then we saw the Eurozone debt crisis, which another crisis, another surge in dollar demand, and we spiked back up again to this 88-90 band that is in the middle of the slide, which is a bit of a pivot point. It came back off again with, when it looked like the EU or Greece wouldn't break away and the EU wouldn't break up, so that the dollar weakened again. And then the US embarked on a interest rate tightening cycle, or the Fed did. And this gradually, slowly but surely, strengthened the dollar. And we broke through this 88-90 level, spiked up as high as about 104 on the dollar index. That was the top. We then expected European interest rates to rise, which would obviously reduce the interest rate differential, but this didn't happen. The Eurozone found its own other issues, not least Brexit. The Fed also was expected to start cutting interest rates, but that didn't happen either. So then we got another rally up around this is the 6 on the slide, which was the spike in dollar demand caused by COVID and the pandemic and lockdowns that we've seen. It then basically came off again on the QE and the flexible inflation targeted by the Fed, and we are currently hovering just in the low 90s. So we're still above that pivot level, but with the longer term expectation that the US rates will not be rising anytime soon, we are expecting to see that have a look at that 88-90 level again. Over the coming months. It won't be a short-term thing, but it is expected to come along that way. If we could look at the next slide, please. So actually down to the election, we have Donald Trump, we have Joe Biden. One of the main aspects of Donald Trump's Make America Great Again policy was to bring industrial production manufacturing back to the States. In order to make that appealing, in order to open up export markets for the States, he wanted a weak dollar. So he actively pursued a weak dollar policy. It's unusual for a US presidential policy to actually target the dollar. one way or another. There was a time in the late 80s and 90s where the US had a strong dollar policy, but this is unusual, and again it ties in with our view that either way the dollar is likely to weaken going forward. He was also very vocal. He accused the EU of artificially weakening their currency. He's accused China of the same. He's not been that. He's not been that way to the UK. Special relationship, it's how I expect. But he does have a definite weak dollar policy. Joe Biden, on the other hand, has no publicly announced dollar policy. He is seen as certainly less of a maverick, shall we say, than Donald Trump, and more of a steady hand. His policy as to regard the stimulus program, if he were to win, the expectation is that there will be a larger stimulus plan, more money printed, which could initially possibly be dollar supportive, but we think longer term, if equity markets rally on the stimulus program, then that will again be dollar negative. So at the moment, as I've said before, we are looking at weaker dollar generally going forward. If we go on to the next slide, please. This is basically what we've pointed out there. If Trump wins, the weak dollar policy remains in place. Possibly see the pound back to the 135 level. It's found good supply at that level twice in the last 12 months. So we'd have to see what happens were we to get there. But certainly we think we head back there. The initial move on a Biden victory, we think would be some dollar strength. But historically, the pound doesn't like to be below 130, and we don't see much in the way of a dip, just purely on the back of the election result. And the next slide, please. Yeah, so the US election, we get a US election every 4 years. It isn't, generally speaking, a massive factor in foreign exchange. We've got obviously Brexit, which is a once in a generation thing, although it does seem to have dragged on for most of the generation already. Brexit is the biggest factor for the pound. It will affect the interest rate, not the interest rate, the exchange rate against the US and the euro. Expectations in the market at the moment are that there will be a bare bones trade agreement. And actually this week there's the EU leaders meeting in the next couple of days, which was Boris Johnson's initial deadline. That seems to have been put back now. So we think talks will continue. Every major agreement with the EU does seem to be done on a last minute basis. So, but we do think, or markets are expecting at least a minimal trade deal to be struck. If we don't see one, then the pound will weaken again against both the euro and the dollar, at least until we see exactly where we lie after that. And as we've said already, Trump victory and a Brexit trade deal would be the best case scenario. We would imagine heading back towards 140 over several months in that case. And a Biden victory potentially initially a dip in the pound rate, but we do think also longer term that would entail us heading back on a weaker dollar. The next slide, please. Just one thing I noted. It seems strange, but after every US presidential election in recent times, other than George W. Bush's re-election, the dollar actually strengthened in the next 2 or 3 4 months, maybe no more than that. This is probably just a result of a bit of certainty or reduction in uncertainty. There's no real fundamental reason for that, I think, other than the reduction in uncertainty, as I said. One thing to say, obviously, if you are exporting to the US, a weak dollar, which, as I say, we are leaning towards, actually make sure if you're receiving dollars from your customers, then obviously in sterling terms, you know that's you're going to get more sterling. Sorry, less sterling for your dollar. So what you want to do potentially is to lock in rates. We offer forward contracts to minimise any exchange risk. Yeah, that's what we do here. That's the purpose of BBFX. There really isn't an awful lot more to say. There's a few questions I think possibly coming up, so I'll hand back to Will, and if anybody has anything to ask, then we'll happily answer as we can.
Thank you, Andy. And if we move on to the next slide, we do have a few minutes now for questions, and here's that screenshot should hopefully tell you how you can ask those questions. And we literally just had a question in from Daniel for you, Andy, which is picking up on that last point. So he asks, with the fluctuating dollar and pound values, how do you best maintain margins for exporting to the US?
Sure. Well, I mean, obviously, you'll have a budget rate. So at the moment, we're hovering around the 130 level, for instance. So if you're expecting to receive dollars and your budget is say at 130, so for every, let's just pick numbers out of the air, for every $100,000, you're going to receive just under £77,000. Or that's what those dollars are worth. If the dollar were to weaken to 140, then those dollars are only worth £71,500, for instance. So what we can do is we can lock in a forward contract. Let's say 6 months' time, you're going to receive those dollars. We can lock in a contract at the current rate. Therefore, it gives you certainty. You know what your dollars are worth when they come. Obviously, if the dollar strengthens, then those dollars are then worth more in sterling terms. But it does give you some certainty. You can basically tie in your profit margin. And as I say, it's a question of certainty and knowing what those dollars are worth to you as and when they come in, rather than really relying on where the market is at that time. That's something, something that we do on a daily basis with many companies. It adds just certainty to your budgeting and your margins.
Thank you, Andy. A question in which I think I'll put to Frank first, and then invite Ian to comment.
If that helps.
Yes, thank you, Andy. So a question now for Frank came from Gabriel, who asks, how do you find potential buyers in the US market? So Frank, do you want to unmute yourself? I think may have lost Frank briefly. So Ian G, do you have any thoughts on how do people find buyers in the US market?
Yeah, I think that there's obviously numerous things. Maybe Frank just come online, but maybe he'll know a little bit more. But I mean, it's the usual, doing your market research. There's a number of platforms to which you can do research, a number of associations that will be related to your particular product, where you can find distributors or importers and exporters. There's Chamber of Commerce's relationships there that are all over the United States. The United States, from memory, have a very good network within the embassy in terms of promoting US products as well. So there's a number of opportunities there that you should quite easily be able to find obviously potential importers.
Frank, I think you're unmuted now. Do you have anything to add?
The question again, Will, again, please, if you will. I was a bit preoccupied getting back on voice.
No worries at all. So the question was around finding buyers in the US.
Okay. Well, that's ordinarily, I wouldn't recommend you go to the States unless you already have a basis of confidence that you already have some buyers in the States, and that might be through your export business, or if you've got a digital business through e-commerce, either or both. Having said that, market research is a very good tool. All the things that was previously discussed in the previous speakers' suggestions are all absolutely valid, but I'm a great believer in trying to apply a bit of science to looking to see where your customers might be sitting in the short, medium, and long term. So market research is very good, and that then ties in with a business entry plan or a marketing plan for the US. So it does actually all hang together in a coherent way, rather than perhaps attempt to be a bit ad hoc and chase the odd customer. But it's a mixture of always with these things, bottom up and top down.
Thank you, Frank, and thank you, Ian. We've had a few good questions coming through. Another one for Frank, though it might actually be Ian might have some input as well. So Bardo, or I hope I said that correct, Bardo, is being invited to a fashion e-commerce is a fashion e-commerce startup, and has been invited to New York Fashion Week next week. On the back of it, a New York store would like to be her first stockist for a minimum of 3 months, of a 3-month period. How does Bardo go about this in terms of sending over samples for the show and future stock for the store? So, Frank, do you want to just cover kind of how Bardo can make the most of that opportunity, and then it might be for Ian to talk about stock and samples after that?
I think that's a very good suggestion. Well, I would take full advantage of it. I mean, you can send the stock over there. I mean, I'll defer to my colleague about the logistics and managing any sort of any freight forward expenses and so forth. But certainly, sending samples, there's absolutely nothing untoward in doing that. It's an excellent way of building a brand presence, building brand awareness, and sampling the market and seeing whether, in fact, there's an appetite for your particular fashion item. And on the back of that, with the relationship you seem to have already with a fashion house in New York, it could be a very interesting starting point for you.
Yes, basically, I think Frank's right, to be honest. Obviously, if you've said it's an exhibition, I wasn't sure that I might miss that. If it was an exhibition, obviously the most obvious thing to do is, normally when there's an exhibition and they're inviting global players, there will be already somebody in place that will be looking after the stands and looking after people to do with imports and getting goods into the country for the exhibition. So that would be your first point of call to find out whether there is anybody there that's actually negotiating. It'll be a logistics provider that's involved in exhibitions. Again, you can still do it yourself by making sure you get contact with a logistics provider here in the UK that will be able to help you to get those goods in, and making sure you get the paperwork done correctly. It has to be done correctly, because obviously the ideal, well, depends what you want to do, whether you want to keep those goods there and just sell them when you're there, or whether you want to be able to bring them back. But there's a number of different options there for you to be able to do.
Bardo's message, of course, to clarify that it's not an exhibition, but it's a whole week of catwalk shows. So thank you for the feedback there.
Yeah, but I think you'll find, I'm sure even with the exhibition, sorry, the show, it'll be the same sort of thing as an exhibition. I think you'll find there'll be somebody there that's involved in bringing all the material, say from Paris or wherever they're bringing stuff in. So they don't normally sell them this. A lot of the time they take them back. And so there will be somebody involved in that show that should be able to help.
And what role does a ATA carnet play in that? That's for temporary export to a country?
Yeah, there is an ATA carnet, which will enable you to bring goods in for a period of time and take them back out, which again, you can deal with your logistics provider or your Chamber of Commerce. But from what you've just mentioned, I think with the show, if it's an international show, I'll be surprised there's not already somebody in place that should be able to take complete control of that for them.
Absolutely. Yeah.
Excellent. Thank you, Ian and Frank. And we'll do a last couple of questions for Andy to bring it back to FX. So Mike has asked, why is the US stock market doing so well compared to the UK? And Olivia has also asked, which I've just lost. Olivia has asked, you mentioned a Trump deal with a Brexit deal option, but a Biden, what would happen in a Biden and no Brexit deal situation? And would Biden with a Brexit deal also lead to a rise in the pound? So one on stock markets and then one on Biden implications if you were to win the election.
Sure, okay. In terms of the equity markets, what we've seen, what COVID has done is basically just accelerated a lot of themes that were going to play out anyway. One of which being tech. One of the main reasons the US market has done so well is because that's where all the big tech companies are based. Your Facebooks, Amazons, Microsoft, Googles, and what COVID and what lockdowns did was just literally a surge in demand for their goods. Consequently, their stock prices went up. Also, the unlimited QE that we talked about that the Fed embarked upon, ultimately that tends to find its way into stock markets. So if you've got an unlimited supply of dollars, which will at some point mostly find its way into the US stock market, again, it's going to be very supportive. The dollar is I guess it's the ultimate risk currency in terms of when there's a crisis, everyone wants dollars. When equity markets are doing well, when economic indicators are doing okay, investors are more inclined to put risk on, and they tend to, surprisingly perhaps, they tend to move away from the dollar into perhaps more emerging markets where interest rates are higher. Also potential, it's just a risk thing, so where your returns could possibly increase, but the initial support for the US stock market was largely tech based. The other question about the election result, as I mentioned, we get a US election every 4 years. It isn't a massive thing for FX markets. The Brexit is, as I mentioned earlier, is supposedly a once in a generation occurrence, even though it seems to have dragged on forever so far. But that is the big thing for the pound at the moment, the Brexit agreement or no agreement. Biden is initially expected to be potentially dollar supportive because he hasn't got a weak dollar policy, but his fiscal stimulus that the Democrats are proposing is bigger than Trump's, would ultimately support the US stock market and with that generally global stock markets, and that would be a negative for the dollar. If we get a Brexit agreement, a bare bones Brexit agreement will underpin the pound. We're probably looking at 135, maybe a little higher against the dollar, potentially a move back to the 115, ultimately 120 level against the euro. That is the big thing on the immediate horizon for the pound. We were hoping to have a bit more certainty by the end of this week, but that looks as though that's going to slide now. We're probably looking at early December, possibly late November, but probably early December before we have any certainty, although there will obviously be lots of headlines and political commentators that will give us probably a good idea of what's going to happen slightly in advance to that. But yeah, that's pretty much the be all and end all for the pound at the moment is what happens with Brexit, at least for the next direction.
Thank you, Andrew. We shall have to wait and see. But yes, on that note, we have slightly run over, so we're going to have to wrap up for now. Thank you once again to Andrew, Ian and Frank for the presentations and answers today. Hope everyone has found that useful, and for those who've asked questions at the last minute or so, we will hopefully take those offline afterwards. On this next slide here, you will see that there is a webinar next Monday, which we are running about the Trader Support Service, or TSS as it is also known. This will support businesses with the changes to Northern Ireland trade, which take effect on 1st January 2021. The service will provide guidance and training, a digital service to support declarations, and support from customs experts. If you're involved in moving goods between Northern Ireland and Great Britain, we definitely suggest you have a look at that webinar, and we will be sending a link to register to it along with the recording and slides from today's webinar in the next day or two. Finally, on the last slide, before we go, just a reminder that membership with the Institute gives you a range of benefits to deal with the changes ahead. This includes access to our technical helpline, discounts on training, a wealth of online resources, a daily bulletin with all the key trade stories, including an FX weekly update from Bibi, continuing professional development, industry recognition, and hopefully one day some networking opportunities again. To find out more about our training and membership offerings, please visit the site at export.org.uk or feel free to get in touch at institute@export.org.uk. For now, though, thank you for tuning in today. We hope you found this session useful. Please do take the exit survey to let us know what you thought and to suggest any future topics we could cover. But for now, goodbye everyone and have a great rest of the day. Thank you.